Welcome back to the Real Estate News. With me now is Bill Fletcher of Unisource Mortgage Services. Welcome, Bill. We're so happy to have you with us today.
Thank you, Jenny. It's always a pleasure to be with you.
And today you brought good news, right? We've got exciting stuff happening in the mortgage industry, so please share with us what's going on.
That's correct. It's very exciting news. Recently, Fannie Mae and Freddie Mac announced that they're implementing new lending guidelines which should make it easier for borrowers to secure loans. In their recent announcement, they said that they are going to reduce the down payment requirements, and they've also clarified when lenders will be on the hook to repurchase loans that have fallen into default.
Right, which is huge.
That's probably the bigger part of the announcement.
I agree.
Than it is with the down payment. In fact, Lawrence Yun, who is the chief economist for the National Association of Realtors, said that the buyback issue has been the #1 hindrance to residential lending. And if that goes away, we're going to see a big boost in residential lending, which is great not only for the end consumer or for mortgage companies, but also for the real estate community at large. Because as everyone knows, more residential lending is a result of more residential sales.
Absolutely. Now, it sounds like, with conventional financing, they're going to be reducing the required down payment. Does that mean that there's going to be more competition, or they're going after the FHA market?
Well, clearly they are targeting the FHA market with this move. With FHA, a consumer can obtain a home loan with a 3.5% down payment. Fannie and Freddie have said they will now start backing loans that have a 3% down payment.
Wow,
The big difference between these two, though, is not the down payment requirement, it's the mortgage insurance. FHA's mortgage insurance is extremely expensive, and not only is it expensive, it lasts for the life of the loan. With Fannie and Freddie, a conventional loan, you don't have that life of loan requirement with the MI, which is a big difference on the bottom line.
Well, and the reason people pay the high premium for the FHA loans is because paying the premium to get the money that you need is worth it. But if there's an alternative, is there still a benefit to using any kind of FHA financing if this conventional loan financing becomes available, or when it does?
Well, while FHA is an expensive option for mortgage financing, it does have its place within the lending community. For example, FHA has a program right now called the Back to Work program. And this is for folks that have experienced a significant adverse economic event which has impacted their credit, which has resulted in either a bankruptcy, a foreclosure, a short sale, or a deed in lieu of. Folks that have had that happen to them would be eligible for FHA financing if they are at least 1 year removed from that event. Now, conventional financing, you may have to wait 3 or 4 years before you qualify, but this is certainly an advantage that FHA has.
Yeah, there is some benefit, and for that benefit, they charge a premium, so it's fair enough.
That's correct, yes.
Well, Bill, it's always great to hear great news about the mortgage business, and it always impacts, industry as a whole. So thank you so much for sharing this with us today.
You're very welcome.
And we'll see you soon.
Sounds good.